people know that you can
there's
assume
nothing.
the VA, but they...
Here's the problem. Here's the problem. When you go to assume a loan, it's actually more of an invasive process than you going than you going to get a regular home loan. See what I'm saying?
Oh yeah.
It's way more invasive.
Okay.
The bank is a lot more
buyer?
strict. Yeah, for the buyer, yeah. It's way more advanced. It's like if buyer A goes up to buy that property with a regular conventional loan or an FHA loan, he came with his own bank financing, and then buyer B, you came there to assume the loan, you're gonna go through a more invasive process than he is. You see what I'm saying?
Yeah.
Because remember, you're now taking over that rate and that underlying mortgage, and the bank's gonna qualify you based on all, so they're gonna be way more invasive with you.
Yeah.
But there's no difference between, it's a lot of people get loan assumptions and subject to mixed up.
Right.
And when you're talking to these realtors, they're gonna get it mixed up a lot.
Yeah, that's what happened.
Yeah, they're gonna be, oh yeah, no, yeah, that's a loan assumption. Yeah, I know what you're talking about.
Yeah.
But it's the education piece with the realtors, you know?
I'm learning too. Like I'm new to Subto. I came to the convention, the Bigger Pockets convention in Orlando.
Nice.
And that's the first time I ever heard of PACE mortgages.
Yeah.
It was a realtor.
I've been a month on Subto. 2 months.
2 months.
I started in December.
Yeah,
It's a holiday, so.
it's a great community, but it's what you make it.
Yeah.
You know, it's like
Yeah,
you have
take
to collaborate.
action.
You have to take action. You have to take imperfect action.
love it.
You have to start doing, trying to do deals.
Yeah.
You know, pick like 1 or 2 exit strategies. Just because you hear me talk about pad split and short-term rental, that might not be your niche,
Yeah.
and that's okay.
Yeah.
Like just pick something that you like doing and go with it. Give it 3 to 6 months before you quit on what you're doing for an exit strategy. A lot of people, they'll try something for 1 or 2 weeks and they'll be like, oh, that didn't work. No, that didn't work.
Right now it's wholesaling. Because that's why
You can wholesale.
doing wholesaling
Yeah.
to build capital. Because
Perfect.
what we want at the end is buy and hold.
Yeah.
But we had to build capital.
Correct.
To that point. So
Yeah.
Have you
right now we're just
invested?
doing wholesaling
So,
to build that capital.
so let me ask you this. It sounds like to me right now, what's important to you is money, right? You need money right now. So that's why you're doing wholesale. Is that right?
Yep.
Okay, that's good. Now the cool thing about wholesaling, and I like what I always tell people about wholesaling, you get to cherry pick the deals. When you start doing it at scale, you can pick the ones that you want to keep for your buy box.
That's true.
So that's awesome. But make sure that when you're doing it, you don't get caught up in the $10,000 to $15,000, $20,000 assignments, because that's the hamster wheel. And you want to prevent that, right? Meaning like you have to start buying assets to build wealth. So your net worth goes up more. And if you don't acquire these properties, you're just gonna be on the hamster wheel. What I see a lot of people do wrong a lot of times, they'll start doing 10, 15 assignments a month, but they never bought a deal in the last 2 years.
Yeah.
And they're making a lot of money. Some of these guys are making 50 to 100K a month. Yeah, but yeah, exactly. And so they don't own anything. So now you have no leverage. You can't get tax depreciation. You can't get future appreciation. Like you get all these big benefits when you buy real estate. You know.
Yeah.
That's why PACE will buy a non-cash flowing deal.
Yeah.
We got one rental home in St. Cloud.
And
Yeah.
The first one. In
St. Cloud.
Is that in Florida?
Say yeah. It's about
like 30 minutes kind of from here.
Okay.
I think
Yeah.
45 minutes. But it was a brand new house, so we just start now, the second year that we rented, so now we start getting cash flow.
yeah.
The first year was just get paid. It was paying by itself.
Yeah.
But now it's we're getting that.
Yep.
You know?
So now you
The
can
new
see.
house, we learned because obviously we having our name, you know, and we just bought a brand new, so it was hard. So we just learned that with that down payment that we just for that house, we could get more houses.
Yep.
Instead of buying a new one. But you know,
Yep.
it's a rookie mistake kind of.
Yeah.
So that's how we learned. So
That's okay.
We got involved
That's
here,
okay.
And
That's a good mistake though.
yeah.
Like there's so much growth that came out of that.